Alright, hey, what's up guys? Scott here again with a brand new video, and for this one here I'll be showing you guys a very cool feature in ThinkOrSwim that allows you to easily assess if your portfolio is essentially properly balanced. And if that's the case, then you should be able to avoid some pretty nasty losses and some account blow up kind of situations if the market does have a major move in one direction or the other. And of course, also, if your portfolio is not balanced properly, for example, if it's just too bullish or too bearish, then again, this feature here in ThinkOrSwim will help you quantify that very clearly in a numerical fashion, and then you can adjust your portfolio accordingly. And ultimately, this is one of the main reasons why I do always recommend that you trade with a more professional kind of platform like ThinkOrSwim here, or Tastyworks, Interactive Brokers, etc., because these are the kinds of platforms that do offer this feature known as beta weighting. And by comparison, for example, with Robinhood, that platform does not offer any kind of beta weighting feature at all, at least to my knowledge. So again, bottom line here, beta weighting, in my opinion, is one of the few essential things that you must be able to do with your platform to be successful in the long term. Now, as always though, before we dive in here, make sure you guys watch until the end of the video, because at that point, I've got a very cool limited time opportunity, which did get a 1 week extension. So there is still time to participate in this offer where you can receive up to 10 free stocks, and each stock could be worth up to $2,500. And also here, if anybody would like to join a very exclusive online community where you guys can really learn how to successfully trade options, then you can now join my options trading Discord. So definitely make sure to check out the description of this video below to learn a lot more. And then finally here, for anybody who is brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you join SKILLSHARE using any of those links, you'll get a full 1 month free trial. Alright guys, so now diving in here, and so this page in ThinkOrSwim is the monitor page or monitor tab, and take a look down at the bottom half of this screen where you can see my current positions. So first off, as you can see, I do have my positions organized in groups. So these two here are naked call options, and down below these are two short strangles, and I also have a category for short naked put options as well. So these are the three main strategies that I trade the vast majority of the time. So actually here, before you do use the beta weighting feature in ThinkOrSwim, I do recommend you definitely create some groups for your individual position types to keep yourself organized, and also you can track your beta weighted deltas for each different group. And for example, the way you do that is simply come over to this kind of light gray bar here on the right hand side, click this button and go to add group. And then as you can see here, that brings up a small window where you can name your group. I'll just call this test group, and then click OK. And there you go. As you can see right here, it added a brand new group called test group at the bottom of my screen. And for example, if I wanted to move one of my positions to that new group, I can simply right click on a position, go to move to group, and then click on test group. And it really is as simple as that. And so once you have your current positions organized by their individual position types, take a look once again at this light gray bar, which was the same bar you used to create that new group in the first place. But on the left hand side here, you'll see this beta weighting option. And right now, as you can see, I have this box here checked, meaning the beta weighting feature is currently turned on for my positions. And then also specifically, my positions here are beta weighted against SPY, which is a major ETF that just tracks the S&P 500. And so now, of course, what exactly is beta weighting? Well, simply put, it simply allows you to quantify the relationship between an individual position and that particular stock you have that position on with a broader market index, like in this case here, the S&P 500, right? Because basically every individual stock and your specific position on that stock will have a unique relationship with the broader market. So for example, if the S&Ps go up by 1% on any given day, then perhaps Boeing here, which is BA, might also typically go up by 1 or 2% as well. But then Nvidia here might have a different kind of relationship with the market. So if the S&Ps go up by 1%, then perhaps Nvidia might on average go up by 4 or 5%. And of course, also some stocks have an inverse relationship with the market as well. So when the market goes higher, some stocks actually go lower, and then vice versa. So ultimately here, bottom line is if you do beta weight your entire portfolio, right, all your positions together, then that's going to give you a very accurate assessment as to how balanced your portfolio is relative to the market, right? So for example, if your portfolio here is too bullish, then you know that if the S&Ps go down significantly, chances are you're going to lose a lot of money. And then conversely, if your portfolio is too bearish, then if the market continues to climb higher, again, you're going to lose some more money. So now specifically here, take a look at this column in both of my current position groups, right? This is the delta column. And right now the deltas are currently being beta weighted against SPY. And also I definitely should mention that once you do create a brand new group here, the delta column is not going to show up by default. So you have to add it in. And the way you do that is very easy. So for each group that you have here, go to the top of that position group and go to the right-hand side and click on the small gear icon. And that opens up a new window right here where on the right-hand side, these are the metrics that currently do show up in my position groups. So again, delta and theta here, you both have to add these metrics, which you can find by going to the left-hand side and simply searching for them. So you can type in delta, and it's going to be the first option right here, just delta by itself, not option delta, just delta. And once you have that selected, just come down here and click add item, and then click OK. So now, for example, as you can see here with my Boeing trade, this is a short naked call option with a 175 strike. So this is a bearish position, and that's why my deltas on this trade, my beta weighted deltas, have a negative number. So again, negative deltas means this position here is bearish. And ultimately what the number specifically means is, for example, if SPY goes up by $1, then based on the unique relationship between Boeing and SPY, and also given my current position on this stock, then therefore, again, if SPY goes up by $1, I would expect to lose about $25 on this one position. So basically here, the default way to read deltas is always if, in this case, SPY goes up by $1, then what's going to happen to your positions? And that's why ultimately bearish positions have a negative delta, because of course, if SPY goes higher, and that's the exact opposite of what I want to happen, then of course my bearish trade on Boeing is going to lose money. But then also take a look at my NVIDIA position as well. So this trade is a bit different because originally I was just short a simple naked call option with a 185 strike, but because right now NVIDIA is above 185, that's why I'm currently also long 100 shares of stock. So this here was basically an adjustment I made this morning. So now this means my position in NVIDIA is a bit more complex, right? Because it's composed of two different pieces, one short call option and 100 shares of long stock. But taking these two things together, my overall beta weighted deltas compared to SPY are still net positive. So once again, if SPY goes up by $1, then I would expect NVIDIA to rise along with that, and therefore this entire combined position would make about $33 or so. And then at the bottom here of each group, you can see the total sum of the deltas for that entire group. So in this case here, negative 25 plus positive 32 equals positive 7.3. And then down here with my strangles, negative 17 plus positive 7 is about negative 10. And ultimately, if I add these two sums together, so 7 plus negative 10, that gives me positive 3, only 3 deltas for my entire portfolio here. And basically what this means is my entire portfolio here is pretty much almost perfectly neutral compared to the market. So I'm really not leaning bullish, I'm not leaning bearish necessarily, I'm pretty much just indifferent. And for the most part, that's generally where I like my portfolio to be. I don't like to be too bearish or too bullish, unless the market is really overextended in one direction or the other. So again, for the most part, I prefer my portfolio to be pretty darn neutral. So bottom line here, I hope at this point you can start to see how you can use beta weighting to decide or determine if your portfolio is pretty balanced or unbalanced, right? So if your deltas, for example, are way too negative, then your portfolio is probably too bearish, and you might want to add some bullish trades, some positive deltas basically, to balance things out. And then conversely, of course, if the combined sum of your beta weighted deltas is way too positive, then chances are your portfolio is too bullish, and perhaps you want to add some bearish trades to balance that out as well. And also, I do want to mention that there really is no right or wrong way to do this. So it's mostly based on your own personal risk tolerance. So for example, if your total combined beta weighted deltas are, let's say, negative 100. So again, that means if SPY goes up by $1, your portfolio might lose around $100. If you're fine with that, then your portfolio is still pretty balanced for you. But if, for example, your deltas are negative 1,000 and you don't want to lose $1,000 if SPY goes higher by $1, then definitely in that case, your portfolio is too bearish or unbalanced. And lastly here, one more thing I want to show you is you can also visualize your beta weighted deltas in ThinkOrSwim as well. So if we now go over to the Analyze tab here, and right now what you're seeing is the current payoff diagram for my Boeing position, but if I wanted to see my payoff diagram for my entire portfolio, I can simply come down here and change single symbol to portfolio beta weighted. And then also after that, come back up to the top here and change the beta symbol to a major market ETF. So again, I typically use SPY. And here we go. This is a visual form of my entire portfolio beta weighted against SPY. And specifically the blue line here shows me my approximate profit or loss by the August 13th expiration date, which I believe is the nearest expiration date I currently have on for my positions. But also here, if I wanted to include multiple expiration dates, because chances are I have positions on with different expirations, then what I can do is come up here and click on this button, go to expiration, and I have the choice of including up to 4 different expirations on this chart here. So for example, I'll just do 2. And there you go. Now you can see this red line here, which is the August 20th expiration. Now also here, there is definitely a lot more you can do with this chart. So perhaps I'll make a separate video just focusing on the Analyze tab here in ThinkOrSwim with beta weighted deltas. But again, for this video, just wanted to show you at least that ThinkOrSwim does offer this kind of feature. And so with that being said, that's going to do it here for this video. I hope you enjoyed it. But one last thing is, as I mentioned, I've got a very cool limited time opportunity for you all where you can receive up to 10 free stocks. So basically, there's a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they're offering you the opportunity to receive up to 10 free stocks when you open a brokerage account with them using my link in the description of this video. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by competing platforms. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your trades and your investments are properly insured. And so if that sounds good to you, then again, use my link in the description of this video to sign up and get your free stocks. And also don't forget to check out and join my options trading Discord as well as my SKILLSHARE courses. Links also in the description of this video. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.